Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's Wednesday, March 8th. It's 2024. Hope you're having a good day. As always, this is serious talk about everything that affects you. We do not play around here. This is serious talk. A little comedy injected every now and then, but I got to tell you, we don't have that much comedy right now. We do the markets, the economy, the media, and their con game. Washington, D.C., and the biggest financial con in history that we never had to talk about until they put the con on. It all intertwines. We'll talk about your industry, your jobs. You name it, we cover it. Business, government, markets put together with no agenda, ulterior motive, or bias. We have taken every one of them on. We have taken all the fire because we have taken on both parties, both candidates. We are not messing around here. We are not messing around as we head into the election. But first, if you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our X feed, which used to be Twitter. And if you want to follow us on X, you probably should. We're pretty cool on there. You can email me, and all you got to do is be nice. If you completely disagree with me, just be nice. We can completely disagree with you, and we will be nice and we will be respectful. Let's do it that way. And how do we start today? As you know, I'm really worried about the fiscal health and well-being going forward. This is not news. This is not a big, gigantic headline. It is not something that you do not know about. Our government spent $35 trillion more than they were supposed to. Most of it over the last couple of decades. It was done on purpose. They lie to us and tell us, oh, it's entitlements and it's automatic. There's nothing we can do about it. That's a lie. There's everything they can do about it. But they don't. And then we ended up with the biggest liar in the White House of all time. And I say that, and we just had Trump. But in order to be the biggest liar of all time, you need help. You need somebody to cover for you. They didn't cover for Trump. Washington Post actually would put out pages. They said he lied 10,000 times. I think it was 10,000, right? And they actually took up a whole newspaper to list everything Trump said that they said was lies. They don't do that with Biden. And what we have to be careful about now, going forward, in case you don't know, Biden is running $2 to $3 trillion a year deficits, a record by far. He's spending more money than we did in the COVID years, a record by far. Spending has been increased in the government by 70% in 5 years, ridiculous amounts by far. He's taken our tax dollars and giving them away to buy votes by far. And the list goes on and on and on and on and on. And just, I never know when something's going to pop up. This past Sunday on 60 Minutes, and by the way, this has everything to do with your money, the markets, our future, your kids. On 60 Minutes, you had the leader of the Democratic Party in the House with Norah O'Donnell. And I mentioned this yesterday, but I'm doing it again because you'll see in a second why. They introduced him as somebody who reaches across the aisle. And then he went on to attack the Republicans right out of the box. Right out of the box. And then, and it was Hakeem Jeffries, by the way. And then it was a softball interview. They talked about Biden and the administration, and this guy said everything's great. They did everything. They did this. They did that. He lied about how many jobs were created when we know for a fact a ton of them, a big percentage, were just coming back because COVID. They said Trump was the worst job guy in history. By the way, that's what Nancy Pelosi did on, I think it was ABC or NBC, and the girl actually called her on it, and Nancy Pelosi's veins were popping out of her head. Our job here is to uncover what the media is doing. And I just want you to recall, we just want fairness. And in case you don't know, leading up to the last election, the media was not fair. They completely blacked out anything on Hunter Biden, anything bad. The plagiarism of Biden years ago. I can go on. I wake up this morning. Anybody hear of Axios? Well, they're a media property. They're a media company, and they're not NBC, ABC, CBS, but they're darn big in the political world. And I wake up, and I'm on my phone, and I'm going through my emails, and I get their morning Axios AM. And it's just little tidbits that lead you to articles, and I am not making this up. The first thing they come up with is this. This is the title. One big thing, Trump's inflation bomb. And I'm thinking to myself, all right, that's got to be a bunch of bullcrap. It's got to be fake. No. Even though under Trump there was no inflation, give him credit or not, but there was no inflation. The title is Trump's inflation bomb. Even though we've had massive inflation under Joe Biden, it's Trump's inflation bomb. And they go on to say, that Trump is lobbying grenades from the sideline as Biden struggles to bring inflation back to pre-pandemic levels. They don't give Biden any of the blame on it. And then they talk about how Trump's going to cause inflation. No, really. So you have a president in the White House now that, whether he caused it or not, oversaw massive inflation, but now it's Trump's inflation bomb. And by the way, this has to be being sent out to a ton of people. And it talks about his tariffs that cause inflation, lower interest rates, that Trump broke precedent in office by frequently attacking the Fed for not dramatically lowering interest rates. Hey, that can cause inflation. Lower taxes do not cause inflation, even though Axios says that. Immigration limits, that doesn't cause inflation, that there'd be less immigration under Trump. So we're just letting you know they're starting. No, they're not starting, they're continuing. They have the grapefruits to put out a headline about Trump's inflation bomb when he had no inflation and Biden had massive inflation and still his. You get my point? So we're going to be covering all this, and we're going to cover for and against, and we're going to pull no punches. We're going to tell you like it is, because this all matters. Because as I have said to you, there is no way in hell we can last with 4 more years of Biden. There's no way in hell we can go to $40 trillion of debt and $50 trillion of debt under him, which is exactly where we're going to go. There's no way in hell we can run $3 trillion deficits and last. There is no way in hell we can have government spending $10 trillion a year, and that's where he's trying to take us to. There is no way in hell all that money's coming out of the economy. There is no way in hell we can have 44.6% long-term capital gains when it's 20 right now. There is no way in hell we can have 25% unrealized gains. There's no way we can do that. There's no way. And I don't care if he was a Republican, Democrat, or Whig party. We're telling you like it is. You have to decide whether you want government taking over the country or we the people? It's pretty simplistic. The year 2000, 1.8 trillion was our federal spending. We're at 7.5 now, and this guy's going to 10. And then ask yourself, where the hell is all that money going to? Oh, it's entitlements. No, it's not. Yeah, there's Social Security, but by the way, wait a minute. How is it possible? I thought Social Security is people, they took money out of their paycheck and they're just getting their money back. No, they stole all that money. So we're going to keep covering it. Axios showed themselves today. We'll see if that continues. Amazing. Trump's inflation bomb, not Biden's. Hey, up next, the market. Lots to cover. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to
Hey, this promises to be fun.
Investor's Edge
The last bastion of quality programming.
with Gary Kaltbaum.
It doesn't get better than this.
And welcome once again to Investor's Edge. And by the way, in case you don't know, it really pisses me off. All we really want is fair. And I'm not talking about opinion people. You know, on Fox, they have opinion people, and then they have the straight news. Neil Cavuto, fair and balanced. Brett Baer, fair and balanced. There's a bunch of people on Fox, fair and balanced. That's all we ask for. We know who the opinion people are. That's cool. We all have opinions. You just got to know. What we can't stand is when Norah O'Donnell, who is not an opinion person, just kisses butt. Just kisses butt. And it's becoming tiresome. And they used to kind of hide it. They just don't anymore. They don't even hide it anymore. It's like they don't even care anymore. And as we've said to you, nobody would ever come on this show from the political world. Nobody. We'd actually hold them to account. What a concept. Hey, you're one of our leaders. What the hell is going on there? How did you do this? How did you do that? How did we get here? Oh, you voted on it. Why did you vote that way? Nope. Nope. Next. I want to talk about something that's of import. First and foremost, blow-ups. I want to talk about blow-ups. You see, as we have told you on this show, I got an email from somebody I don't even know last night that I forgot which stocks they bought. One of them was Disney. And there was one other stock they bought right before earnings. And Disney was down 9%. The other one was down 10%. And they emailed me and asked me, how do I prevent that going forward? They actually asked me that even though they know for a fact that one of my main mottos, whatever you want to call it, I will never, ever, ever buy anything right before earnings. And there's a simple reason why. I just don't know. Everything we try to do here is 3 words. Get an edge. What's my edge? And when we say to you, oh, we looked at these extremes and relative strength, and when this happened, that happened, and we're studying precedent, it's trying to give us an edge, and hopefully it does. There is no edge in predicting what somebody's going to do on earnings. You just had 2 big blow-ups in Facebook and Netflix. By the way, both are rallying back up, but that's not the norm. But you had 2 big blow-ups in those names. I keep all the blow-up lists and go through them. Disney just dropped 10%. Palantir, this is yesterday, a very popular stock, blasted. Datadog, blasted. Ferrari, which has been a strong stock, blasted, although it bounced a little bit today. Bloomin' Brands, still should be called Outback Steakhouse, was hit. And Expedia, hit. Cuervo, Percom, Fastly, DoorDash, blasted. Be careful. You know why I say that? Because I'm looking at aftermarket just now, and Airbnb is blowing up, Duolingo is blowing up, HubSpot is blowing up, SEDG, SEDG is one of these solar stocks that have been already mauled. ARM Holdings, one of the recently strong IPOs, semiconductors, I don't know about 6% being a blow-up, but it's down 6%. And then there's today. And again, we're talking about this because this is about protection of capital. And I'm about to tell you how I handle these things. Today, just letting you know, Inspire Medical down 33% on earnings. You catching me? Qualys, QLYS, down 10% on earnings. A computer software group. Shopify, a very popular name in software, down 19% on earnings. DoubleVerify, I'm sure you haven't heard of that one, down 39% on earnings. This is just today. You ever hear of Broadridge Financial? I haven't. Down 6% on earnings. We're just letting you know how we handle things. We don't buy anything before earnings. Now, what if we own things before earnings? Well, we have a rule, and I don't know if it's a hard and fast on a number, but it's a rule. If we have little or no cushion, we're typically out. That's it. On earnings. Gary, how do you stay in then? Well, we don't. And we let the market decide after earnings and go from there. How many days before earnings won't I buy? It depends on the market, but one would suggest 2 weeks of trading. I try not to, unless it's just for me and I know I trade. For clients, though, where I'm trying to invest, a little different story. That's our take. And I'm just bringing this up because of that one email. And I like addressing, I address the email with an answer. And I don't name names. But we're addressing this now on how we see things. And you may differ. Remember there was somebody I mentioned that said buy Netflix 2 days before earnings and the stock dropped 10%. And I don't know if he still has or not. He was on TV. It's back up a bunch. But who the hell wants to be down 10%? Up next, a little more and much more. I'm Gary. This is the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
By the way, it's still amazing to me that these people had the nerve to send out something titled Trump's Inflation Bomb in order to attract people to, I better not vote for Trump. The title should be Biden's Inflation Bomb, and under Joe Biden, this, that, and the other thing. They just don't care anymore what they look like. They don't care what they sound like. They don't care what kind of BS it is. I mean, unmitigated BS. Trump's inflation bomb. And just remember, I don't want either of these people. These are the two last people I would want running the country. And I mean that. But we got to tell you how we think and like it is, fair and balanced. As much as I don't want Trump as the next president, I got to tell you how he gets screwed. Now, Biden, I got to go rougher on him because nobody else does. They kiss his rear end 24/7. And if you think about it, massive debt and deficits, 1. Horrible job with the border, 2. 2 of the most important parts of our lives about what's government and their checkbook and the border that's been destroyed. Do you know the head of Homeland Security has admitted they don't know where the hell a bunch of people are that came in? And they have no idea whether some of them are terrorists or not. He said that on Capitol Hill. Who are these people running this country that would put us into harm's way that way? Think about that. I put out a tweet yesterday on Trump that they're threatening to put him in jail for his words against witnesses, and in New York City, you can shoplift 50 times and not go to jail. You can beat the crap out of somebody in a subway with a pipe and not get bail. Seriously. Do you know how many people they have let out that have injured others in New York City, but they want to put this guy in jail? What the hell is going on? And all we ask for, you and I, just be fair. And there's a lot of unfair out there. And we're going to call them on it. And I can guarantee you one thing, the media is going to kiss Biden's rear end for the next few months, and they're going to give Donald Trump a colonoscopy 24/7. Guess what? We'll be glad to give them both colonoscopies 24/7 when and if they deserve it. And tomorrow, we'll have Trump up to bat because he did an interview. And let me just state for the record, he did not say no when they were asked about violence if he loses this coming election. And that just plain sucks. Just to let you know. Okay, so a little bit of that. Blow-ups. We got more in the aftermarket, as I said. We'll see what happens tomorrow. And it's just a matter, you just don't know. And that's all we try to tell you here when it's earnings. On the upside today, let's do the other side so you know that we're not just talking one way. You had today, let's see what I got. How about Arista Networks was up 6% today, ANET. Louisiana Pacific, yeah. Wood, up 20% today on a nice gap. Cirrus Logic, a semiconductor name, on 0% sales growth, up 12%, breakout to the new highs in a market that doesn't have a lot of new highs. I've never heard of Globus Medical, but that was up 20% today. But we didn't know they would be up. And we don't want to guess. We're not smart enough. Now, the Dow was up 172, but the S&P was down. What does that mean? The Dow was up 172, but advanced declines on New York were 17 up, 22 down. The Dow was up 172, but as I looked at my left screen, 90% of it is red. My middle screen, 60% of it is red. I'll make it 65. I look at my front screen of leadership, and a lot of it was down. What does that mean? Well, it was less than meets the eye today, but I'll tell you what was more than meets the eye today. You had a good day on banks, bigger ones. JP Morgan popped a little bit today. Goldman Sachs, another new high. Boy, did I fumble that one. Actually, I didn't. I bought it and stopped out, and then it went again, and then you had to wait for earnings, and I missed it this next go-around. Such is life. So just letting you know, with the Dow up 172, the S&P was down. The NASDAQ was down 30. The NASDAQ 106. Transports down 12. And the transports are just still... nothing happening there. And that's to be watched. 1 + 1 = 2. We are big believers that... Wait a minute. The transports are what? We're just big believers in that. Wait, the rails and truckers are what? And this is while gas prices have been coming down some. Now that's been off mentioned, oh, comes a recession, here comes a recession, here comes a recession, here comes a recession, here comes a recession. We're going to let you know there is no chance of recession until the market craps out. The market has never missed a recession. And we're not there yet. Let me take that back. A nasty recession. I mean, you can have growth in the economy -0.5%. They call that a recession, but to me that's okay. You know, you just drifted along. I'm talking about where we contract. That's what I'm talking about. Now, some of the signs again are rails and truckers, economically sensitive names, and the like. Just don't see it just yet. And there are issues. As I said, rails and truckers for starters. But the big indices are now above the 50-day moving average. I can promise you that the big indices will not be above the 50-day moving average if we were going into a recession of note, a contraction of note. Now, I will tell you this. I get emails from a lot of you, and I appreciate it. Got one from Arizona yesterday about somebody that rents out Airbnb and says business has gone to hell. Went from really good to nothing. And now people are trying to sell left and right their Airbnbs because they're losing money. I got something from a trucker a couple of days ago. Business is going downhill. And a few other things. And we'd love to hear from any of you in your industries on what's going on. But we have a good ear to the ground for us and you. And things that stick out every now and then, we gave you the example years ago. We came on this show and said to you, I just want to let you know I'm only in one city, but I got a Target and a Kmart within a half mile of each other. And Kmart's a crap hole. Target's busy. Nobody's in Kmart. Well, there's no service. Shelves were empty, dirty. While Target, things were humming along. A year later, that Kmart was gone. And guess what they did with the rest of the Kmarts? While Target has thrived, though they had a little hiccup here recently on inventory control and whatever else. So sometimes it's what you see. Up next, what else happened today? This is the one and only Investor's Edge.
You're listening to
What are we waiting for?
Well, what are you waiting for?
1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
Along those lines, there's just no way if big banks are acting just okay. They don't have to be acting strong. If big banks are acting okay, and look, they're the greatest bookies of all time. If they're acting okay, there's no way we're imploding. If they're acting okay. I know how this goes. I know how things work. That was Winston. That said, what they are doing in that place called D.C. continues to scare the hell out of us. We think they are taunting you, taunting taunting the markets, taunting industry, taunting their economy, the economy, with their Marxist control freakism. And when you look up Marxism, it is about, just so you know, and communism, it is about taking from people who earn and doling it out to people who haven't in order to make everybody equal. And it always destroys economy. It destroys hope. It destroys upward mobility. It destroys want. And Joe Biden's trying to supersize it now. I cannot believe the proposals coming from the moderate. And in case you don't know, it's not being covered. It's not being covered. It's not being covered. And inflation? Oh, it's the Trump inflation bomb, according to Axios. We'll stay on it. As far as the market, as long as the indices stay above the 50-day moving average, good. If they go back below it, bad. It's as simple as that. And put the word in front of good and bad with the word potential. As I have told you, the physicality of the market, when you are above, you have only potential good. Doesn't mean you're going to have good, but only potential good. Below it, you have only potential bad. When you're below it and go above it, you've changed the playing field. When you're above it and go below, you've changed the playing field the other way. Thus, we follow it very closely. Just recently, we got back above it, but there's a lot more work to be done as we get through earnings season. And I can safely tell you what we have right now is quite the mixed market. When I do my scans, I think about 50% of stocks look like crap. It's the best way I can put it. Think that number should be better. The better names are marking time. The best names are best. The better names are marking time, trading around back and forth. We'll see what comes of them. We're quite agnostic. We know there are people that are saying, oh, we're going up the rest of the year because it's an election year. Oh, okay, thanks. Like somebody knows where things are going to be in November. All we can tell you is if we stay above the 50-day potential good, if we go below potential bad, if they start getting the big financials that are acting just fine right now, bad. If they keep cracking the transports, bad. If the 10-year yield keeps going up, has been bad. That's a correlation. Remember, we're always looking for correlations that work and that matter. And I can tell you flat out, the big correlation over the last few years is interest rates up, bad, down, good. And that brings along the dollar with it. And that's how the market's been rolling. If the correlation ever changes, we'll change. It used to be the GM indicator back in the 70s. It was money supply for a while in the 80s. It was the briefcase indicator with Alan Greenspan for a while, which was the funniest thing in history. Right now, it's rates. And that's why we pretty much have it front and center and have every little tick. And the bigger problem with rates is how much debt there is now. When we had little debt, rates going up a lot, not the biggest deal. But at $35 trillion, try rolling over debt at 2% and now doing it at 6%. And see how much more that is. That's how I know we're headed to $50 trillion of debt, more than that. And that's how I know we're headed to $1.5 to $2 trillion every year. $1.5 to $2 trillion of interest on our debt, brought to you by all these politicians the last 25 years. Notice how many of them retired. They're getting the hell out of Dodge. Look what I did, now I'm gone. Ha ha. I got about 6 more pages of earnings this week. Most of the big ones are gone, but there are some that matter. We'll stay on top of them, both good and bad. Hopefully good. I'll be on with Varney and Company, Stuart Varney tomorrow, 11 a.m. hour, usually 10, but tomorrow 11 a.m. Check it out. on Fox Business Network. Until then, then for this show. You have a great evening. Drive carefully. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Have a great evening, everybody. Thanks for joining us. Serenity now. Bye-bye.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.